Why the portfolio diversification is important for the investment point of view. The diversification ensures that by not putting all your eggs in a single basket, you will not be creating an unwanted risk to your capital, and diversifying your stock portfolio is important because it keeps any part of your investment asset from being too heavily weighted towards and one particular stock or one particular investment destination or a particular industry or sector. The biggest benefit of the portfolio diversification include the minimize the risk of loss of your entire portfolio asset. The overall portfolio asset exposes you to more opportunities to learn and to invest to ensure that it gives you the highest return, safeguard you against adverse market conditions. By creating a diversified investment portfolio which is spread the capital across more than one investment category, investors can reap those benefit advantages. The diversification into multiple assets classes will help to protect the investor's capital in the event that one segment of the financial market that does not perform well or up to the expectation. For years, for many financial experts have recommended for a 60-40 portfolio for the best diversification processes, allocating 60% of the capital to the stock and 40% to the fixed income investment, such as bond. Meanwhile, others have argued for more stock exposure, especially for the new investors who are very novice to the investment scenario. The portfolio can be diversification can be very helpful way for the mitigating those risks and protect against volatility. Since those alternatives generally exhibit little to no correlation to the traditional equity and fixed income market, they can be a solid option for those who are looking for diversification is asset, its portfolio that due to their potential for above average yield structures, they can also help to ease some of the pressures that associated with some traditional way to invest those industry and those diversification processes in many sectors and many way actually stocks, bonds, cash, alternatives, anything. And through the tier of sectors, industries, and many others important parameter included that personalized your goals and timeline also involved in these goals and timelines. Another reason for advanced portfolio growth and the income opportunities may be the reason that investor looks to alternative investment is their potential for enhancing those portfolio returns by providing those exposure to a broad range of assets, alternative investment that can help the investors to achieve the growth or access those sources of return that are not tied to the broader equity and bond markets, and that the alternative investment tend to be more complex than the other asset, and they are often require the specialized knowledge working with those financial professional that can help you to get a clear picture of where return potentially lies and whether these alternative investments support your goals and risk appetite that the market industry demand for, that you are looking for to gain those highest return in this portfolio, I mean investment portfolio management. The selling those assets that can lead to the capital gain tax liabilities, and alternative investment can serve as a way to help those mitigate or defer the impact of these liabilities, especially for the long-term investment in the real estate or any other investment trust in the security, and these are typically held for longer than 12 months, and they are subject to the long-term capital gain tax, which is more favorable than short-term capital gain tax. Another factor to consider as an alternative investment that gradually and generally long-term illiquid investment, and those typically have an investor requirement that must be met, and many alternative investment that are non-public offerings and may lack of market situation, favorable situation, and transparency around some investment charges, type of investment that include additional risk compared to other registered securities, and those alternative investment that may include those complex trading strategies, non-traditional holdings, and those opportunistic strategies, leverages, and many more other important factors that can help to diversify those portfolios, that important for maintaining those portfolio to mitigate those risks, to get the maximum return, and also it's uh, reduce the subject to market risk conditions. Alternative investment covers a broad range of strategies and the structures that are designed to be low or non-correlated to the traditional equity and fixed income market with a long-term expectation of illiquidity. Alternative investment involves some substantial risk and may be more volatile than traditional investment, making them more appropriate for the investor with an above the average tolerance for the risk appetite. And this diversification and asset allocation do not ensure the profit or protect against those losses. Investment that product are not federally or FDIC insured, maybe it's the guaranteed by some financial institution that involve, and some alternative investment that can provide some unique benefit in the long-term investment portfolios, and some that include the private equity offerings and funds offerings, also the real estate private placement, exchange funds, and non-traded business development companies, and manage those future funds also in along with the commodities that included some alternative investment scenarios. Despite the growing popularity of those cryptocurrencies, it's worth nothing that they are not an alternative investment and should be considered separately as a part of a broader investment strategy. And depending on the current asset mix and long-term goals, adding those alternative investment to your portfolio can help to access the new areas of the market, industry, and knowing the risk and benefit that can help to decide whether you are in the right portfolio setup for the better return, or you have to alter those allocation. That's all for now. Thanks for watching. See you in the next video.